What is going on, everybody? In this video, we're providing in the state of the market and stock picks for March 23rd, 2023. So if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today was the big day for Powell to come on deck. Now, leading up to today, there's been a lot going on for the past 2 weeks. I had a lot of rumors going around about First Republic as well. Speaking of which, they actually just got downgraded to B here after the close. But nonetheless, we had Powell today. That's what really mattered. A lot went insane today. As expected, that a lot would happen. Coming into today, 25-point basis move was anticipated. There was an 85% chance with a very slim chance of a pause. And then at 2 p.m. Eastern Standard Time, the rates had come out and it was a 25-point basis move. Now, the market was really undecided. Again, if we would have gone a pause, the markets would have ran. If we would have essentially come in at 50, the markets essentially would have got crushed today. But there is a lot of issues going on before even going into Powell and what Powell was talking about. Um, a lot of the banks are in horrible shape. And that's why I mentioned First Republic before I even started. It could be the potential next bank. There's still a lot of issues with SVB. And then, with all that being said, now you get another 25-point basis move that is going to absolutely crush and put some of these other banks underwater. The ones that may be barely skating by, I think, is going to be the hair on the camel's back that's essentially going to break it. And then you're going to get multiple more banks and some new banks brought to the forefront. Now, with that being said, we go into Powell. He came in about 30 minutes after the rates were released. Essentially said that all depositors would be okay and not to worry, which is funny because at the same time you had Yellen talking about it was going to be selected banks that would essentially get the backstop. So there was a very much a disconnection between what Yellen is saying and what Powell is saying. Again, it's about the first time we've seen Powell since the SVB incident. And after saying that, he sounded very dovish in a sense, but ultimately understand that there was a lot of confusion because people didn't know how to interpret the fact that, they've dished out 300 some billion already last week alone, and that is potentially considered as quantitative easing. Again, it's not directly pumped into the markets themselves, so you don't have that money essentially in circulation. That's essentially increasing your demand, right? But even with that said, um, again, very interesting scenario. He was talking about that. Him and Yellen were going back and forth. Again, saying completely opposites of what people were saying. People try to dive a little bit deeper, and then Powell just kind of got really guarded and just kind of thrown out a lot of very generic statements, kind of saying what he's always said, that they were very data dependent on what the next steps were going to be. Again, we don't have another monetary policy till May. With that being said, they are already predicting another 25-point basis move, 65% chance of another 25-point basis move, trying to essentially say that his mission is to get in hold or get control of inflation. And so, with that being said, whether he's safe-faced or not, he did mention the fact that they considered pausing because of banks. Now, this is something I've been talking about up to this point. I really do believe that they want more banks to fold or go underwater. So essentially, that they can get the disinflation that they want, and that this would essentially bring that down so that they could actually start quantitative easing. That was another question that came up: was okay with what's going on with the bank situation. will there be QE as we know it, essentially rate cuts? And he said, baseline is saying no. There will be there'll be no cuts this year. That really kind of put things in perspective, and the market really started selling off of that because people thought with the bank breaks. I mean, I'm still even thinking that this was going to happen. We're going to get quantitative easing this year. They were projecting, I think, like 4 rate decreases this year. And I think that's very much accurate, to be honest. If banks do start breaking, he's not going to come out and say we're going to we're going to increase 25 more and see what banks survive. And if we lose a couple banks, then we should be still in good shape. We might be able to add another 25 into the next one and then completely obliterate banks. But he's going to do 25 increments, 25 BPS at a time, and then kind of see what happens at that point. I think you're really going to see that. You're really going to start seeing a lot of banks folding. And then in turn, what that's going to do is provide our disinflation and hopefully still get control of inflation and continue to bring inflation down. That was another big thing too, is, the leading into that question was asking, will there be any kind of pause? And he said there would be, that there wouldn't be any rate decreases. So a very interesting scenario. Again, I think if you can get enough banks to essentially go underwater, you might actually get QE. There might actually not even be a pause, depending on how nasty this the cycle can get, and depending on what essentially the numbers, quote unquote, say that the market is still strong, which I don't believe it's strong at all. I think the numbers are very misleading, and there's a lot of. I mean, you can go out and get a couple tacos and a couple adult beverages, and you're paying well over $50, right? Like that's just absurd, just for like 6 tacos and some and a couple of drinks, right? I think that's just absolutely absurd for a drink. So even with that being said, it's inflation is very much an issue, and so Powell tried to make that clear today. Whether he was saving face or whatever the case is, it really doesn't matter. We're at 25. We're projecting another 25. Our next step in this final stage is to see what banks give, and I think First Republic will be the first. We have to also understand that coming into this morning, there was a lot of global news about banks doing a really bad job, and things were barely holding on. And then you essentially had Powell come out, and now you've got all the regional banks even more concerned what's going on. So it's going to be an interesting time in the next couple of days leading after this post monetary policy. Again, the market sold off, like you can see here. Like it's crazy here after right when Powell hit. I would try to push up today, and then the Powell stuff came out, monetary policy, and we just actually got crushed. The question is where do we land tomorrow? Do we end up down here, essentially at the 38.90? I think it's a very strong possibility. Again, another time people thought quantitative easing was coming and the market started pushing, and then we didn't get it. And so now we're starting to sell off. And the fact that people know, I think with the banks breaking, people know that there's something that's up at this point, right? Like I think you can pull the wool over so many people's eyes, and then some people will come around. A majority of people know there's something wrong, and then when the banks just really solidify that, that's what I was talking about, having that event. Now we have the event, and now it's just waiting for more banks to start folding and going under to start causing disinflation. He did say he was seeing disinflation, and I'm sure he is if banks start folding. You have billions coming off the books, essentially, if that does happen. So with that being said, and you had Credit Suisse, right, that did the same thing over this past weekend. So the big question is we got 2 more days. I think tomorrow's going to be potentially another big sell day. Again, we have to see how we open, what happens, and what news comes out. Again, right now we're in a bank crisis, so there could be news at any moment, at any time. Right after I'm done with this video, there could be more news that can completely change the dynamic of the market, right? And then maybe Powell has to lay off or cut rates next week. I mean, it's a very strong possibility because now we got 2 months with no monetary policy, but we do have core before then. So being said, we shall see. We'll see if we'll hold, if we can hold essentially the 39.39 tomorrow. If not, for some reason we start pushing up. We did feel this gap. I mean, that's another lower high right there. Is essentially what you've just created. So it looks like we could potentially go for another bottom here. Again, our current bottom is roughly sitting at 35. But we'll have to see what happens here if this really starts selling heavy. That again, that roughly around that 3,800 is a strong support. We could consider this a bounce, then potential to just break straight through this. If we do break that, I do see us going back down to this lower low, this 3,600. Again, the way things are playing out, it could start really accelerating at this point. So again, we are just waiting for more news. We had our major event today, kind of solidified all that. So now you got another 25-point basis move. Again, realize that 25 points, it puts banks even further underwater with the bonds. And so now we wait and we see what breaks even more. And then those ones that were barely holding on are really going to go under now. So we just sit back, relax, and we watch and see. And then once these banks start folding over, hopefully we can get more of a some momentum to one side or another. Tomorrow, once we get overnight digestion, I think people are really going to understand that there is no pivot. At least that's what Powell is saying. Again, I think it's just, there's a strong possibility it could happen, but you need something big. Like the couple banks isn't bad, but then you have the backstop. We have to understand that normally when the first backstop doesn't typically work. I think if you blow that out and you start having more banks, like I said, you get quite a few regional banks just going under. And that's the headline news every day, is a new bank is essentially failed. This is what happens, right? We need to normalize the banking industry and remove a lot of banks. And yes, that involves a really nasty downturn, but that is what is necessary for these bull cycles to gain steam to start picking back up again. So again, you can't expect that just a backstop and we're going to start running back to all-time highs. That's just absurd to think that. And the way things are just set up, things are not good. Your average American is in not a good shape. And the numbers with debts and savings aren't good. And a lot of these interest rates again aren't fixed, right? They're variable rates, and so they're jumping all crazy. And this is only making it worse. And so now you have the housing industry, you have the banking industry that are extremely sensitive to rate increases are going to get even worse. And so you're going to see this effect in the housing sector. You're going to see this effect again in banking, and we wait more for something to break. Maybe we get more bank failures and we start getting more people losing homes, right? Or are defaulting. Now the home thing is definitely going to take a lot longer. That is not a quick thing. Just like the bank thing is not quick. It does take a little while to start playing out. This is, again, only the second week that we're going through. I think we still got 2.5 more weeks before this thing really starts unraveling fast. And then that will essentially put us still a month out from the next monetary policy. We will be getting the earnings here pretty soon. And we're going to perhaps get exposure to banks and what they're looking like. And I'm sure that's going to look very nasty to give us more insight into what's been going on. So again, there's still a lot to unpack about what happened today, and then going into the next event. So that's what I'm watching on SPX. I'll pop this back down to the daily. Let's go take a look at the dollar. Again, the dollar is coming down. Again, rightfully so. You had your black swan event, right? And so at this point, I'm not really concerned about the dollar, right? What's the bank break is what we were looking for. Now we have it. So at this point, I don't really care what happens with the dollar. But again, we are pumping backstops back in, so it could be the deflation of the dollar even more, but we'll see there. Bitcoin, this is something that happened after hours. Not long after market close, the SEC has gone after Coinbase and has gone off after Kraken. So with that being said, it looks like on-ramps for crypto are starting to shut down, which is crazy, as both of these news drops happen like not long after the close. And then it all kind of plays into, if you look at everything from the top down, it's all kind of playing into perspective. If they don't want people and money supply to be going into crypto, they shut off the on ramps essentially, and they essentially knock down some banks, close banks, introduce the CBDCs. It's something that people like Coin, one of my brothers from Tag Team Crypto talks about and been talking about for a long time, but it's becoming that way. Is today the shut off of on ramps, and so you get massive spike. You're not really seeing it here on the daily, but after hours you got a huge dip. Again, this thing could bounce right back, but more than likely, what's going to happen is if something does happen even more, if that story develops at a Coinbase, then if even Bitcoin comes out, that could be hugely concerning and could get a massive drop, as opposed to just making crypto illegal. You can just turn off the on ramps, and then people just can't get to it, and so that could be even more of a problem. So we wait and we see. Again, there's big news around every corner. There's a lot going on. And so there's just a lot to digest again. And then Tesla has started selling off heavy today after that news. I guarantee this thing continues to keep coming down moving forward. But it did have the Moody upgrade, so it's been kind of rocking from that. But again, since we're kind of getting this bank concern, a bank crisis, I think this is just going to continue to roll over and start selling. It's been a while since tech has chilled out, so I think this is going to really chill it out even more moving forward. And the Nvidia, same thing, started selling off really heavy today. Finally, it's had some great news and shot up dramatically. Again, I think it's going to recover majority of this move and potentially see a 185 again. Again, really depends on how everything goes. If we start getting a crash, whatever, if that does happen, I don't want to keep mentioning crash like it's going to happen. If it does happen, again, these levels I'm really marking really aren't going to matter. We'll really have to see. We'll have to see how things hold up. I think in the general index it would sell, and I think that big move would come from the banks, and then banks would get destroyed down to absolutely nothing, and then you would the rest of the companies would soon follow. A lot of tech has taken some heavy hits anyway, so we'll wait and we'll see from that point. But don't want to get too far ahead of us. That's why I don't like projecting too far ahead. We got to take it day by day, especially in this environment where you're getting new news every couple of minutes. So BA needs to hold. It needs to hold roughly this. It's been kind of holding this 196. If it breaks below that, you're looking roughly around the 182. And then you got another support here at the 167. So watching those there. Again, not really expecting these things to start running back up. Banks, as you can see, JPM started selling off heavy. I dropped down to the hourly. Big selling in that power hour candle. We'll see if this continues back down. The 123 is kind of what we're watching there. Goldman Sachs. Actually, we are kind of sat flat the past 2 days, but started selling after today. Again, Bank of America, same thing, kind of break, retest, and see if it continues dropping down. It's getting nasty out there. There's no easy way to put it, and I think the average consumer has already been feeling it for a while. But now the banks and everything else are really going to make it happen. You're going to get some more massive layoffs. Amazon's supposed to lay off more people this week. And then also, or if more banks start folding and going underwater, that's going to be more people that are laid off there. Payrolls and stuff are going to be delayed. Projects are going to be delayed. There's going to be a lot of delays moving forward. So just be very mindful of that. So again, very interesting situation that we're in, and it continues to evolve every minute of every day. And this banking crisis, and waiting to see for the next thing to break, and then by that time, again, I do feel that we will start quantitative easing this year, but it's going to take some more bank failures, perhaps something from the housing industry as well could start adding on, and you can see where this thing could start spiraling out of control really, really fast. And something I've talked about all the way to this point is you need to kind of let this thing play out. And then once it starts playing out, it's got enough power to really sink us. It really just depends on the release of when the next thing happens. if we do start getting housing stuff involved with everything and foreclosures and everything else, again, that's very, very delayed and takes a very, very long time, but they are very sensitive to interest rates, just like the banks are. So again, we'll see. We'll wait and we'll see. I know just owning a home right now, with inflation being so high, these costs are just chewing up people's savings and everything else. So it's to be a homeowner right now is really, really difficult as prices continue to increase or haven't come down quick enough. So it's causing a lot of people just have to turn around and sell because it's just too much. So with that being said, if you made this far, I do appreciate you. I want to try to keep these a little bit shorter since the big event happened. Now we kind of just let everything digest, and then we take it news article by news article and go from there. So if you made this far, I do appreciate you. Go ahead and drop a like. Until next time, I'll see you guys later.